Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. It is up 0.3% for the week. So just a few dollars short of an all-time high. Hit the all-time high last week and then came in about $2 short of it this week. I think this is one last little last sigh of relief by the markets. The Fed isn't talking about lowering rates because the economy is having a good time, which leads us into the story of the week, actually. Jerome Powell has capitulated. So they're very likely going to lower rates in September. The Fed has two mandates. It has a mandate of low inflation and another one of high employment. So if we go to our friends here at the CME Watch Tool, on September 17th is their next meeting, and there is a 75% chance, according to traders, that they are going to reduce interest rates. They're going to cut interest rates. Only 25% of traders right now think that they will do nothing. And on October, if we go forward to the next meeting in October, only 13% of traders think that the Fed will still have interest rates where they are now, and the other 87% think that they will be lower than they are now. Okay, so that's what we got there. Basically, this means that they can't maintain their 2% inflation, and they're essentially giving up. So they're just going to run it full steam ahead. They're going to overstimulate. They're going to have nominal growth, not real growth. So basically what that means is that the numbers are going to go up, but what those numbers will buy you will be less and less. So we're going to have high inflation, and at some point I believe they're going to do yield curve control. So what does that mean? That means that the Fed has to buy these bonds because no one else will. Other countries aren't buying them. We're not buying them. We can see that the inflation rate is going up higher than the interest rate that these bonds are offering. So no one buys them because everyone sees that this is a bad deal. Now the Fed goes, okay, well, no one else is buying them, then we got to do it. That's why they say that they're the buyer of last resort. So 2% target inflation is out. I believe we're entering stagflation. And what is stagflation? That is low economic growth, high inflation, and high unemployment. So you got a period of high unemployment when no one has, or high inflation when no one has a job. Now, how do we turn that frown upside down? Okay, up until this point, we weren't really sure if we were right. Right? Well, what if the Fed, instead of cutting rates here, like Jerome Powell alluded to in his last meeting, what if instead of cutting rates, he actually raised rates? Okay? So if he did that, what if you could get 10% on a bond, or you could get 15% on a bond, right? Then you actually have some competition here for gold. Okay? All of that is out the window. Powell gave us the answer, and the answer is essentially real things, assets, real money. Gold, silver, copper, platinum, oil, energy, food, land, cash flowing real estate. Okay, if you have fixed debt on a property that is paying you income, that income follows inflation as time goes on, but that fixed debt stays the same. So that you will make out in a high inflationary environment like that, right? So I feel like everyone here kind of knew what the answer was before Friday, but we didn't know, right? Now we know because he told us. And essentially that's what we're seeing here on a lot of these stocks and stuff on Friday, is the market realizing like, oh, okay, the game is on, and they're just going to print and they're going to do yield curve control. All right. Okay, so the dollar is, there it is on Friday, just shot down, down 0.1% for the week. It was climbing, and then Jerome Powell did his news and fell right back down. Came right into support here. But this was kind of a a bearish flag pattern. I won't really call it a true bear flag here, but it is bearish. And if we look at this bottom trend line right here, we're just connecting 3 points, and it shot below that. So I think the dollar is more likely to go down next week than up. And the U.S. 10-year Treasury also fell out of bed on Friday. It is down 1.5% since last week. 10-year Treasury is now paying 4.25%. I think we're on our way down with this one. I think fewer people are going to be buying bonds, and this should probably break this trend line, I'm thinking, next week. We'll see. All right, and gold is up 1.1% for the week. So kind of bullish consolidation here since April, just kind of trading in this sideways pattern, almost kind of coming up to like a pincer, like a kind of like a point like this, right? Like where it's ping, 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 and then it's going to break one way or the other, right? I Jordan Royburn of the Daily Gold has, if you watch one of his recent videos, he's basically put out a thing that says, like, you know, going back over a lot of gold breakout moments, they usually come back and touch down and correct pretty close to the 200-day moving average. So that is a real possibility. I mean, we could come back and touch down near it. I don't really know. What I do see here is I see a pretty bullish pattern. I mean, I wouldn't call this necessarily like a bull flag, but it's definitely a bullish pattern with really bullish consolidation here, and I think it's going to break one way or the other. My sick hope is he's right, and this does correct down to the 200-day moving average, because I think what we'll get is we'll get a lot of Johnny-come-latelys that have bought into gold, and they just see a 10% drop like that, and they get shaken out, which will give us these junior mining stocks that we love so much and we want more of, a really cheap entry point. The other scenario is that this just curves right up, breaks this to the upside, and then we're off up to the next line that I see is going to be 3,700. So those are kind of the scenarios I'm looking out for right now for gold. I think I'm leaning more towards the upside and we don't touch this one, but I hope he's right, and I hope we do touch the 200-day moving average, because that is going to be an epic moment right before the real run. A little bit of housekeeping. I'm doing stuff in the background, my editor and I are, and we're going to be branding the channel so that we can live stream when we're interviewing Rick in the classroom, and you'll see it here on YouTube and a bunch of cool stuff like that. So in order to do that, I got to change the email and the handle of the stuff, so there might be little hiccups along the way, but we didn't go anywhere. This will not affect the newsletter or the premium service or any of that. So just keep an eye out. If you see a little hiccup or something, that's what we're doing. It's for a good cause, and it'll make it better in the long run. Okay, let's see. This is spot price of gold. It's about $50 less than the futures price, and gold divided by the S&P 500. So we closed the week out at 0.529. Now, if we look right here, it's right above this rising 200-day moving average. This is hit perfectly right on the 618 retracement and coming right back down. I think we may come back down here and touch the 618 again, maybe lining up right with the 200-day moving average. I think this would be a pretty sweet bet if, for whatever reason, you still had some S&P 500 and you wanted to rotate it into gold. I think that would be the sweet spot to do it. That's one of my favorite trading setups, honestly, and I go over that in my TA series, is a rising 200-day moving average right when it hits the 618 retracement. Like you're like 80% when you see that setup. David says the M to the cubed is where it's at. I've been following MMM for a year. He's talking about Monday market moves, right? Starting with a little and building up slowly but surely. Thank you, Steve. Well, thank you for watching, David. I appreciate it. I love doing this. And he says, by the way, Emerald Resources, is that a good bet for a gold junior? Shout out to the Rule Classroom, because Rick and I just talked about this one a couple days ago. So check out the archives if you haven't seen it already. And Rick and I talk about Emerald Resources, David. All right, moving on to PHYS. Okay, so new guys to the sector. This is where you start. This one's up 0.9% for the week. And the way we do this is we got the red, yellow, and green lines. These are patent pending. Still waiting on the patent office for this one. Basically what this means is, like, this is where you set your limit orders, right? So your first limit order there is 25, and then 24.25, and then $23, right? And then the 15, 35, and 50%, that's, let's say you're going to bet $100 on this. Then you bet, what would that be, $15 here, and then $35 here if it gets down to that level. And then you place half your bet, $50 down here, right? So as this gets cheaper, the deal gets better, and assuming nothing is fundamentally changed on the gold bet, you want to buy more as it gets cheaper. You get into the black real quick when it reverses, okay? And I changed these lines to be a little bit thicker due to your guys' suggestions, so let me know if that's better compared to last week. And also, I have a, let's see, what's the, oh, I moved a bunch of these lines like going down. So rather than me saying like I moved every single line, assume I moved it unless I didn't. There might be like 2 or 3 that I didn't move the lines, but with Friday's news, and we had quite a bit of action this week in the stock market, I moved a lot of the limit order lines up. All right, GDX is up 3.3% for the week. So we had a massive breakout right here a couple of weeks ago. This one, if we run this, okay, so we had a bull flag right here, so pull going up, and then bullish consolidation, right, going sideways, and then it just broke out right here to the upside. So I moved this limit order line up now that we have a bull flag breakout, and you guys remember from our TA series how to measure these, right? So we take the pull, and we measure from the bottom of the pull, if it's a bull flag, where's my little tool, there it is, bottom of the pull to the top here, and then we measure the breakout, so the bottom side right there. So this could have an upside target of 64 or 65 bucks. Not something that I would buy right now. I like these buy orders back here when it was boring and no one cared, but pretty cool. We had a bull flag right here that finally played out, and then another little one right there. I would call this kind of a toddler bull flag, not a real big one, right? You could see that down here in the MACD, see how it gets nice and blue and then just a touch of red. So it's starting to mature and then boom, it broke out. So I don't know that this will go up there next week. I think gold's going to be on the rise this week. So we might get a touch up there of that. But yeah, looking really good for GDX. And GDXJ, same kind of thing, broke out as well, up 3.2%. Move the lines up on this one. First little buy zone is going to be coming back, see if it can just retrace right back here to where it broke out. And that would be a nice touch zone right there for the GDXJ. And silver is up 2.8% for the week, so shot up on the Fed news. Was hoping for a little bit of a pullback that just didn't happen. It's probably going higher next week. So that's encouraging. And the spot price here is just a little bit less. Okay, so John says, appreciate the explanation of contango and backwardation. He's talking about last week. That was as clear as could be. We're learning as we go. Those details on deeper levels of market navigation are very useful. Okay, thank you for the feedback, John. So basically, contango this is the futures price. So this is 1 month contracts that are, they're basically trying to decide what is silver going to be worth a month from now, right? And this right here is the spot price. So when you go into your local coin shop or you buy it from Andy Scheckman, then this is what they reference, and that's how they establish their price, the spot price. What's the price right now, right? Contango is this is more expensive. The futures are more expensive than the spot market. And backwardation would be if this were reverse, if the spot market was more expensive than the futures price, right? So if you kind of watch both of them in tandem here, I'll start pulling them both up every week so we kind of get a running tally. Usually I was just watching the futures price, but I think there's some value to be had in watching both of them because it can kind of tell you what's coming up in the future, right? Okay, so that's contango and backwardation. And the gold to silver ratio, gold divided by silver. Gold underperformed silver by 1.7% for the week. So we got the death cross that we were looking at. Oh, and you guys will notice I'm using blue lines now for the moving averages. I noticed when we're putting in the horizontal lines of support or the horizontal limit orders, the red, yellow, and green. Well, the 20 moving average was green as well, which was kind of confusing, especially when you had a flatline stock. And the 200-day moving average was yellow, which was also kind of confusing when you had a flatline stock. So I figured just light blue for 20, medium blue for 50, dark blue for the 200. So basically, the darker this moving average gets, the stronger it is. And then it's not the same colors, kind of confusing with the limit order line. So let me know what you guys think. Okay, where were we? Gold to silver ratio. Yes. Okay, so this is doing what we thought. Silver is outperforming gold. And that kind of makes sense. I mean, 87 ounces of silver for 1 ounce of gold, that still seems a little extreme to me. When we go back here over a long duration of time, we can see that we have moments here where it gets down into the 50s or even, you know, down here in 2011, it got 33 to 1, right? Or even lower. So way up here at 87, it looks like silver is a better deal than gold. No surprise there. And PSLV, so this is your physical silver on the stock market, something you can buy with a mouse click. I don't really see any purchases right here, but I like limit orders at 12.40, 11.75, and then $11. Oh, and we got a note. Let's see. Hi, Steve. Hope you're well. I watch your podcast religiously and really enjoy the content. Well, thank you. One thing that I would like to hear on a future podcast, is there any counterparty risk with gold or silver ETFs? Wondering how the Sprott physical ETFs differ from GLD and SLV. My fear is that investors could get holding the bag on a technicality if the world goes to S. Also concerned if the physical metal being held in another country could be captured by the home government. Not a conspiracy theorist, but I think crazy stuff might happen. Thank you. Okay, so I went over this. I interviewed John Ciampaglia, the CEO of Sprott Asset Management, and we talked about this. So go in the archives, watch that video. Long story short, basically GLD and SLV are essentially, you cannot redeem. The Sprott funds, you can. The thing is, no one watching this show is going to redeem, a 1,000-ounce bar of silver and go through the paperwork and hassle to do so, and no one's going to redeem a 400-ounce bar of gold just to do so, right? You could if you wanted to, but it probably costs you more than it's really worth. But anyways, you could if you wanted to through Sprott, but you're not going to do that on the GLD, and you're not going to do that on SLV. So that's the main difference. I suppose it is possible that if governments wanted to, I mean, Canada, their government technically doesn't own any gold. I suppose they could confiscate it like the US did back in the 30s. Maybe they would do that, maybe not. I mean, I think if they do that, then we're living in a world where I'm probably out of a job because nobody cares what the GDX does. You know what I mean? Like, I think that's probably a scenario where it's not really going to matter if they do. We have bigger problems. You know what I'm saying? Like we have war in our homeland or something. Okay, hope that helps. Where are we here? SIL. So the Silver Miners ETF is up 2.4% for the week. So move the lines up here as well. I like the first limit order at 51.50, then 47.50, and then $43 as a stink bid. Same kind of pattern here. Got a little bit of a bull flag with kind of a breakout. So we could have a measured upside target. Maybe I should draw this just to make sure we're all on the same page, right? So you got this with the bull flag, okay? And then we'll do the measured upside target from the bottom to the top. Oh, there we go. From the bottom to the top and drag it over to the breakout point right there. And this could get up to 61, $62, somewhere in that range. All right, SIL is up 2% for the week. Similar pattern, but see how it's kind of rounding right here? I wouldn't necessarily call this like a bull flag. I was actually thinking this might be an island reversal here on Tuesday, and then it did not comply. It just shot right up. So looking really good on this one. I like first limit order at $15.50, $14.50, and then $13. In the pipeline, next week we'll be interviewing Rick Rule, and I'll also be interviewing him in the Rule Classroom Plus. So anyone can watch, but to ask the master a question, you've got to be a student in the Rule Classroom Plus. So we'll be getting together Thursday at 12:30 Pacific time. So join us over there. Links are down below. Also have our resident geologist, Joe Mazumdar, giving a presentation on Wednesday at 4 p.m. Pacific time. So be there or be square. I wonder where that saying came from. Be there or be square. How does that even make sense? All right. And copper, paging Dr. Copper down 0.75% today. So bear flag here. I have a hard time imagining copper going much lower, but that is a bear flag. Lost in Gary says, you mentioned a bear flag in copper, but aren't the RSI and MACD crazy low? Thoughts on how that impacts the bear flag? Okay, so basically, this is why I like some of these indicators a lot, the RSI and the MACD. And, you know, bear flags and bull flags happen pretty often, so these come in handy with that. Generally speaking, with bear flags, you're going to want, they're probably going to form in the lower half of the RSI and the lower half of the MACD because they're bearish and the stock is going down, right? The price action's going down, so it's naturally going to be below this 50% line, right? The opposite is true with bull flags. So usually when bull flags form, they're going to be north of the 50% line and kind of up towards the upper, right? Makes sense. And the way I like to use these is when the pole is forming, usually you get a massive drop in the RSI, you get high volume, and then you get this red histogram here in the MACD. As the flag starts forming out, and when it moves from a baby to a toddler to mature, this red histogram starts to go to blue, which we can see right here. We've got a few days worth of blue little bars right there, which tells me it's starting to mature. So we'll see if this forms out. There's also some volume indicators in there as well. But yeah, I'm optimistic that this could drop and maybe we'll get a deal on some copper equities. And COPX is up 2.25% this week. So I got a question about if this could be an inverse head and shoulders pattern. And I would say no. And generally speaking, it's because you want an inverse head and shoulders to be forming as the price is moving down, because it's a reversal pattern. So it's showing a change in direction, meaning that, and this is where the head and shoulders, I just deleted it, I don't know why, but that's the shoulder, here's the head, and then here's the right shoulder, right? And it's a reversal pattern, so it would be aiming to the downside. I mean, maybe it is a head and shoulders pattern, but it doesn't click enough of the boxes for me to really make it like something worth betting on. I want to bet on something where it's 60% or higher, right? Like, and when it's not at the base of a pattern, when it's at the top, then it kind of makes me think like, well, I don't know, you're just removing like a huge part of the bet right there. I would rather bet on it when more things line up. So anyhow, I don't think this is a head and shoulders pattern. If it is one, then it's not one that I would have enough certitude to place a bet on at all. If you like charts like this, then definitely check out our technical analysis series. We go over stuff like this, you know, basically buying the dips and selling the rips. Haven't sold any rips on copper yet, but this is exactly what I go over in the TA series, is like how to find these bottoms. How do you bottom pick like this, right? And the way you get it is go to our website, stevebartonmoney.com, or there's a link down below in the pinned comment. And you go right down here on the homepage, claim here, right? Technical analysis basics, got a lot of positive feedback on this one. Let's see. Daniel says, great stuff, Steve. I'm a technophobe, so all this doesn't come easy to me. Been a precious metals devotee since the Hunt brothers, to my detriment. That's going to change. The skills you share will get me there. Well, welcome aboard, Daniel. Don't have to worry about being a technophobe. This is very, very easy. The first 30 minutes, there's over 3 hours of videos on this, on what I look for in patterns and using TradingView. And the first 30 minutes are me going through and showing you exactly how to set up your chart so it looks like this. So we go click by click. You put in the moving averages. You can even make the colors whatever you want. We go over the RSI, the MACD, how to find these, and we go mouse click by mouse click to show you exactly how to make your chart look exactly like mine or tailored to whatever you want. So getting a lot of positive feedback. If you want to check it out, you can do so at stevebartonmoney.com. And while you're there, sign up for our free weekly newsletter. There is no spam. It's just you and I, and one email once a week. And yeah, just basically my macro thoughts for the week, kind of summarizing what our guests have taught us during the week and what I'm looking for next week and where I think the big bets are going to be. All right, COPJ is up 1.4% for the week. Kind of could do, I'm looking a bit like a topping pattern. See how it's just hit this same point many times and it hasn't been able to break through. So I don't know. I'm a little 50-50 on this one, but I do like limit orders to the downside, 25.50, 24.25, and 22.50. And uranium is up 1.7% for the week. So I think we found the new floor. Mark my words, it's around 71 to 73 bucks, I think, is our new floor. Oh, and last week, this chart was kind of messed up, and I found out what it was. It was like this. It was like, that's not the spot uranium chart. See this little button down here, set? Need to click that, and then it looks like our price chart that we're used to. All right, so spot uranium, I think, has found a bottom. term price of uranium's up around $80. So we know in a year from now, it's going to be at least 80 bucks. And some bullish news this week, Kazatomprom, the biggest uranium miner on the planet, has reduced their guidance by about 10%. So that means they're pulling less uranium out of the ground, which makes less uranium available to the utilities and making the uranium that we have that much more valuable. The uranium we have, of course, is SRUUF, which is up 2.8% for the week. Now, they have currently now 68.5 million pounds of uranium sitting in a warehouse unavailable to the utilities, which is fantastic. They also purchased another 50,000 pounds this week. So premium members got a little heads up to this on Thursday, and we got in down here. We're up about 5% at the moment. The discount down here was around 9 or 10%. So we're able to catch that little arbitrage. If you like setups like this and you want real-time updates, then you're going to love our premium service. When you sign up, you get grandfathered in, and as long as you stay subscribed, the price will never, ever, ever go up. I'm grateful and honored for everyone that has signed up. Thank you for that. Here is how you do it. When you go to the website at stevebartonmoney.com, right up here on the homepage, you can type in your email right there, or go to newsletter here and type in your email there. That will get you on the free service. When you sign up for the premium, which will be available on every weekend update that you get that comes out an hour after this show, it comes out at 10 a.m. Pacific. The newsletter comes out, the free one, and then if you scroll all the way down to the bottom of it, if we go here, this is last week's newsletter, right? August 17th, so the next one will be August 24th. Summarization of the week. Maybe you don't have time to watch hours worth of YouTube videos every week, but you got 5 to 7 minutes to read a newsletter, and this one's for you. Summarizing what our guests talked about, what we learned, some of the top bets that we could place to make money from that, right? And what's coming up next week. So newsletter subscribers are able to submit their questions for Michael Oliver, and also join us for Rick Rule and interviewing him live and putting in questions live. So they had the link to that. And then a final word from me, basically what I'm looking at. And then you scroll all the way down to the bottom here. And right down here, this is where the premium subscribers get an extra 30-minute video, sometimes longer, of the stocks that I own. So I own some of the SILJ, but I also own some junior silver miners that I think are going to do a lot better, right? That's where you get this, and it's a Monday market move style video going over the alpha in the portfolio. Okay, so I would love it if you signed up. Thank you to everyone that has done so. It's super easy. Basically, you just download the Substack app on your phone, and as new stocks come up, I let you know what I'm buying and what I'm selling with my own money. You get real-time updates. And last week I made some moves in the portfolio, so sent out some real-time updates to premium subscribers. My aim is to make things really easy and friendly, easy to follow. One click and you're there. You get a discount for signing up for the annual version. And there's also downloadable on the Substack application on your phone. So use the email that you want. You can enable notifications, and when I send out an update, you'll get a real-time alert when something interesting happens, right? If you have trouble, feel free to reach out. We're here to help. And or ask your grandson. Kids now understand technology probably better than all of us put together. Okay, back to uranium. And URNM, our favorite uranium ETF, shot up this week, up 2%. Let's see, I got some feedback. Could this possibly be a head and shoulders pattern? Okay, so I definitely see what you're seeing here, and it is possible. Okay, so head and shoulders pattern is a reversal pattern, just like an inverse head and shoulders is a reversal pattern, right? So head and shoulders is a bearish pattern indicating that it could be reversing down. Inverse head and shoulders is the opposite. It's a bullish pattern. We'll see how this is kind of at the top. Okay, that's good, right? Okay, so we got, let me draw here. So we got the left shoulder. Oh, where's my little thing here? Come on, paintbrush. There we go. Left shoulder, head, and right shoulder, right? Okay. That makes sense. If we want a measured downside target, it goes from right here to here, right? And then we just click this down here. So that could get us pretty close to our best buy line down here at the green zone. So we'll see if it plays out. Friday's action certainly didn't play into that. Maybe if Jerome Powell hadn't done that, we would have had this head and shoulders play out on Friday. I don't know, but yeah, another thing here is you want the line to be horizontal like this, or you want it to be up like this. So you have the left shoulder, head, and then right shoulder like that. You do not want this to be angled down, or we would be in a downtrend, and then this pattern doesn't make any sense. Kind of like the one we were talking about before. Okay? All right, that is a confusing bunch of lines. But I got a feeling, even with these patterns, that uranium next week is going up. Fundamental case is just too darn good. Okay, URNJ is up 3.4% for the week. So we almost had a setup right here on this 200-day moving average. Okay, so this bar, had it come down here to the 200-day moving average, I probably wouldn't have been able to help myself, even though I'm a little afraid that uranium is kind of overbought. Yeah, luckily, I guess it didn't. Anyways, shot up there on Friday. But man, that would have been a sweet setup right there. I like setups like that where it just comes right down, bounces perfectly, like this one right here. Look at that. Look at that bar right there on the 200-day moving average and just shot up. Imagine this in options world. Not that URNJ is liquid enough to have options. Well, I haven't even checked, so I don't know. But yeah, that would have been a good one. Okay, moving on here. Oil, crude oil is up 1.4% for the week. So kind of looks like we're running out of buyers. See, volume's starting to tick down a little bit. I'm kind of thinking it's going to go down next week. XLE shot up 3% for the week. So first limit order line right here, 84.50. You got a moment on that on Monday and Tuesday to click into that one. Or did you? No, if you had it at 84.50, it got within a couple pennies and didn't hit. Well, hopefully you were on it and you got it the week before. Yeah, that's a bummer. Got within just a few cents. Well, I think it's likely that oil surprised me here. I did not think the equities would shoot up like this. I actually thought that they would go down next week, and I was feeling pretty confident that these limit orders were going to hit down here at 81.50 and 79.25. The one bearish thing we got here is we have this trend line that's been hit 1, 2, 3 times, and I mean, we're basically there somewhere around now. So we'll see if that acts as a bit of resistance or if it just shoots right through. It's looking like it's going to go up, although I hope it goes down. And natural gas is down 7.5% for the week. So this $3 line just absolutely got smoked and broke. Now, last week I said $2.75 looks like a good level of support. Nope, fell below that. Next, I see we got quite a bit of price action around 240 to 250. So we'll see if that can act as some level of support. But my bias for next week is nat gas will go down. Now, the natural gas equities is up 2.1% for the week. So first limit order hit right there at 22.75. Then the one after that, we got 21.75 and then $20.50. Looks like it's probably going up next week. Kind of strange that nat gas is going down, and I think this one's going up. Is a bit of a parallel channel there, not a very long one, and I kind of hesitate to even draw it, but it's there. I don't know. I don't see any bettable pattern here. Yeah, one way or the other, flip a coin. And coal, thermal coal is up 1.6% for the week. Met coal is down 0.5% for the week. Looks to be like coal is following the pattern that Matt Warder lined out, and we would expect our coal equities to get a little bit cheaper here coming into October, November. And our favorite coal ETF is down 2.3% for the week. So this created a really neat setup right here, and I almost sent this one out to premium subscribers, and then I ended up not. I wasn't certain enough on it. But anyways, this is the 200 moving average, so it came right down there. hit on the 200 moving average and then started moving up. We do have a bullish, a golden cross coming up here. So that's where the 50 crosses above the 200-day moving average. And that's why I've got the limit order right here at 1950. So if you guys had your limit orders in for 1950, congratulations, you're in and you're already up. And platinum is up 1.3% for the week. Now, this one is slightly concerning. So what we got here is we have a bear flag forming. So we got the pole going down and then basically kind of the sideways action like this. And so we could have a downside target here. I mean, this is just ballpark here, you know, don't hold me to this, but something like that. I could get down around 1,100 bucks. That's around the 200-day moving average. That would make sense. I don't know. We'll see if it irons out or not. I would like it if it fell down there, but I don't know that it will. There's some bullish news coming up for platinum. All right, and PPLT is up 1.3% for the week. So with some platinum catalysts, fundamental news going, maybe this will do well, maybe not. I like limit orders here at 120, 110, and then $100. And platinum divided by gold, okay, and this is also interesting. This one and the silver chart, they're both forming bear flags, showing that it could be, this isn't a great bear flag, but it's kind of a similar formation here. But this could be that gold is about to outperform platinum and silver is about to outperform platinum if these charts go down. Okay. And the Bloomberg is, where are we? The Bloomberg is up 1.25%, 1.25% for the week. So thank you, Jerome Powell. This was his bar right there. And nickel still hanging around 15,000. Nothing new there. Just looks like a dying heartbeat. And NIKL is up 1.7% for the week. So we have a bit of a baby bull flag right here. So we can see there's kind of a pole, kind of a little bit right here. This is very loose right here. I don't even know if we're 60% on this, right? So this isn't really something that I see as a bettable pattern. But you got the red histogram, just starts to fade into blue and then starts to go into red before it just broke out. So we could have an upside target here of, from bottom to top, measure the breakout, and boom, right there, just south of 14 bucks, kind of around where we have the resistance line drawn. All right, and our favorite metals and mining ETF, PIC ETF up 2%. I would wait for a double bottom. That does not look like it's going to come. Where does that hit on the Fibonacci? Is that right around? Oh, that's interesting. Okay, so this one came right down into the 20-day moving average, kind of got scooped up right there, and also by the 38% retracement and on the way up. So it'll be interesting to see when this has a correction. Next resistance on this is going to be $41.50. And Bitcoin is down 2% for the week. So here's the long time lines that we've had drawn here on the Fibonacci extension. And it seems to be hitting price action right around those levels. Right now it's having a hard time busting through the 117.5 level. I see this going down, and the next level of support is going to be right there at 112,000. Okay, well, thank you guys for being here. I love doing this. If you'd love to play a little more alpha, check out our premium service. You get a whole nother video just like this with company-specific charts, real-time updates of what I'm personally buying and selling. And remember, when you sign in and sign up, you are grandfathered in at that price. Thank you for being here. Go to stevebartonmoney.com for more, and have a wonderful day.